Business news. The Africa CEO Forum has become a leading gathering of Africa's private sector leadership, hosting the continent CEOs, international investors, experts and high-level policymakers every year. Earlier this year, the conference happened in Abidjan in Cote D'Ivoire. And next year, this event is already scheduled to be taking place in Kigali in Rwanda. But what can the meeting like this do in growing inter-Africa trade, for example, and investment, unlocking business opportunities for South African businesses across the continent? Well, the IFC's South Africa manager, Saleem Karimjee, spoke to Collen Lemawane.
Of attending such CEO forums?
So this is a forum that's now, I think, in its third year, that tries to bring together CEOs from Africa to talk about investing and growing the African economy. So it's very much an African conference attended by the top CEOs from all over sub-Saharan Africa. They get together, network, talk to each other, but also listen to panels and presentations from other parts of the world that have gone through similar processes of trying to grow their economies.
So in essence, it's all about investing in other countries, which is intra-Africa investment.
Pretty much so. And in some cases might even be investing in their own countries, but they're looking for a technical partner, for example. So just to use an example, South Africa is a very industrialized economy. The rest of Africa is not as industrialized in terms of manufacturing. So maybe there is a sponsor in a country that is looking to create a new factory to produce something that the population wants, but needs a technical partner, and comes to a forum like this hoping to find a South African technical partner.
So the companies that have ventured into investing in other African countries, if they have succeeded, what is it that they have been doing right?
Not very much different from what CEOs do all over the world in terms of the choices they make. So understanding the market, making sure that there's a robust business case for the investment that they want to make, making sure that they understand the regulatory framework in a particular country and how to navigate that successfully, finding good management, all of the same ingredients that an investment anywhere in the world needs to succeed.
But you'll understand that the political spectrum of each and every African country is not similar to the other. You would find that some countries are more of regimes that have been there for a lifetime, and the fundamentals that have to be in place do not really favor the norms of doing business in as far as corporate reporting is concerned, good governance and the likes. So how do you make a choice in terms of your investment destination?
So let me start by saying that IFC, the company that I represent, is a financier and a development finance organization that tries to promote the growth of economies in the developing world. So we're not the investor, we support the investor. We also support the country in attracting the investor and in creating the framework, the regulatory framework that makes it comfortable for an investor to actually go ahead. But you're absolutely right in one thing. There are 49 different economies in Africa, not one. And we sometimes speak about Africa as if it's one country. It's absolutely not. Every country is different. Every country offers a different environment to investors. Somewhere like South Africa, very well established, now very pro-investment with the new policies that the government is promulgating. Other countries that are still, from a different ideology, still hesitant about the private sector, but I would say by and large in the whole of Africa, all open to the private sector and all wanting the private sector to join and all prepared to understand, so what do I need to change in my laws or in my investment climate in order to enable more investment?
But there are companies that usually get their predictions wrong. For example, Tiger Brands, they had hoped that they can pursue a venture into a broader, larger African market like in Nigeria, but things went south there. Can you just paint for us a scenario of what could have gone wrong?
So I'm not familiar with the details of the Tiger Brands case, so let me speak generically. I think that if we go back about 10 years, a lot of South African companies realized that, hey, the rest of Africa, 20 times the population of our own country, must be a very interesting marketplace. And look, we're already in Africa, we know how to do it. And they went to other countries and realized that they actually don't know how to sort of follow the culture and the local norms of that particular economy. And some of them, Tiger Brands is not the only one, burnt their fingers and came back. What I am seeing now is a new wave of South African companies going into the rest of Africa, much wiser, much more thoughtful. They've done their sums again. One thing you can be sure about financial projections is that they're always wrong the next day after you make them. So nothing is ever perfect, but there's a much more mature wave of outward investment from South Africa happening now, much more thoughtful, much more spending more time on understanding how does it work in that country before we get there.
Is it feasible to consider markets such as Nigeria? For example, MTN has been struggling with, obeying some corporate laws there and repatriation of their funds.
Yeah.
And secondly, a market like Zimbabwe, where inflation is skyrocketing there. Are these the kind of markets that you can be able to copy-paste and make a decision based on the financial projections, the political stability, as well as an operating environment that is conducive to the kind of business that you want to do, so that you can get your money back?
Yeah. So I think that I would say that there's almost nowhere in Africa where you cannot invest. You just have to be, investing is not the same flavor for everybody. So there are people who are shall I say, their risk-return calculus is such that they would find those countries a little too challenging. And they'd say, look, I can do the same thing perhaps in one of the neighboring countries of South Africa where the culture is similar and the rules are similar, and I'm okay with a slightly more modest return. Others will say, no, those countries are a challenge. I can find a way to do business there, and many have. You've picked up on MTN, which has had some difficulty in Nigeria, but they're still operating. They're still profitable, and they are, as far as I know, not about to run away. They're going to sort out those problems, and they will stay put and make good money. There are other South African corporates that have done the same thing in Nigeria. Shoprite, for example, doing very happily in Nigeria. You just have to kind of be prepared that it's not always the same. And to bring this back to the CEO forum, one of the benefits of getting CEOs together is that if they get along well, very often one of the best ways to figure out how to do business in a new country is to have a local partner.